Hello and welcome back, guys, to the channel. And on today's video, we're going to be looking at part two of the technical analysis series, where we're actually going to dig much deeper into um, the whole technical analysis thing and unlocking new knowledge that could help us to understand technical analysis in a much greater way. But before we get into it, as usual, guys, make sure you like, subscribe if you haven't, turn that bell button on for notifications, and let's get into it, right? So based on the MMC footprint strategy, right, we always talk about the same three things, right, which are structure, S&D, right, and confirm, right? So these are the main three things that we always look at when we're approaching the market, right, regardless which market it is, right? Because these three things have been tested over and over again, right? There are things that have existed a long time, right? And uh, it's literally the same thing applying or repeating itself over and over again. But before we get to the actual part, right? I just want to give you guys a simple insight on what we do and how we do it, right? So we our analysis criteria, right, is based upon the three things, which are structure, S&D, and confirm. But how we apply or how we marry these things together is the most important part of the job, right? So first, first is first, right? We need to see that structural impulse that does what, that breaks structure, right? So in a bullish case, right, we need to see something like this, right, with this break of structure right here to indicate that the market is going where, bullish. And after we have this, right, the next part we're going to look for is that S&D zone, right, that demand zone, which is actually the last down move before the up move started. Well, this is just a picture perfect example. It doesn't actually always happen like this, but it's just an example for learning purposes. But when we get into the actual charts, we're going to define them based on how they are. And the last part, which is confirmation, right? Confirmation, which is done where, when the market has done its pullback, and like at the point of impact between the pullback and the S&D zone, that's where our confirmation zone is based, right? So we need to see the market making that pullback in terms of intermediary structure going bearish toward this zone for mitigation. And once that mitigation is done, right, once this supply or demand zone has been mitigated and price now needs to continue to its trend, right, which is the bullish trend, we're going to want to see price coming back up, right, breaking structure within this intermediary trend, right, creating new highs instead of new lows, right, making those lovely retests, which in turn are our entries, right, and then seeking to take price now further to the top side with this high as the overall next liquidity run area, right? So everything that we do is pretty much rooted in this this schematic here, right? And based on technical analysis, right, this allows us to be much more correct when we're approaching the market. Why? Because patience is key, right? It doesn't mean that just because we have this schematic or criteria for entries doesn't mean that we always have to be on entries, right? The most important part of being a trader, right, the most important section in this business is being a patient guy, right? You need to be, as a trader, you need to be patient, right? Patient traders are the ones who are almost always rewarded, right? So I'll say that phrase over and over again until it sticks to the minds of you guys, right? So now I basically wanted to break down a certain trade that I myself took, right, and see how we apply, how we marry these things together um, in terms of technical analysis, uh, and how we're able to position ourselves in the actual charts and manage to be on the right part or the right side of the market, and make money, right? Because the everything we're doing here, we all want to make money, right? So um this is the trade that I took. Actually, I just want to break this one. I'm not a swing trader. It doesn't mean that I just took an entry here and held here. No, I'm a day trader. Of course, I did hold, but it was just portions of my overall trade, right? I am a day trader. I look to position myself um, as much as possible throughout this whole move, right? And be able to make money throughout the whole move, and not just position myself at the top and wait for price to do its thing. No, I'm a day trader. I do not do that. That's for swing traders, and everyone just wants to make money. And in the end, if you are profitable in trading, regardless of what type of trader you are, what type of strategy you're using, you know, it is what it is. So this was the overall um this was the overall setup or entry that, you know, I was looking to take, right? Because what we had was this break of structure here that particularly originated from this high with the creation of this low. So what we had was simply a structural impulse, right? Pushing bearish. So this was the structural impulse that caused what? A break of structure. And from that now, we are now focused, right? So this was the high and this was the low and this was the break. Okay, the break is pretty much annotated. So the next thing that we were looking at is to spot that S&B zone, that, you know, the most probable supply zone in this case, since it's a bearish trend, the most probable supply zone that is more likely than not to hold price into a next bearish move, right? And as this concept, I have been speaking about it for quite a while now, if you are a follower of my videos. And if you're not, then make sure you work your way up, because you're not going to understand everything with, you know, just watching this video and the next one. No, you need to, if you really want to get an understanding and an in-depth understanding of what we're doing here as MMC footprint traders, then I strongly suggest you work your way up through the MMC footprint playlist. And, you know, that that will help you more than enough to understand how the whole base of the MMC footprint strategy is laid upon, and, you know, work your way up and understand how we approach the market and how that works for us. But regardless of that, let's now continue with the video, right? So I have been speaking about this important concept, that if price is pushing, in this instance, bearish, right? You're having breaks to the downside, right? The actual probability of price making those deep pullbacks is very less compared to the probability of price making, price breaking structure, making a slight pullback and then breaking again, right? Making a slight pullback and then breaking again, right? The probability of this scenario here to happen is very high compared to that probability of the picture perfect markets, right? Something like this, right? Something like this. The probability of this happening is very less. These deep pullbacks towards the original zones, the probability of these happening is very, very, very much less compared to this. Why? Because of the volume that's applied in the market, right? Because if price made a low and then made a high, right, the actual momentum that the bears have to step in, right, into this market to enter here and take this market further bearish with the break of this structure is very high. Thus that this allows bulls who are in this case very weak to take price up all the way up here, right, to the original zone, or this in this case it's a lower high, right, and then continuing then bearish, right? The probability of this happening is very less. I'm not saying that it doesn't happen. Of course it does happen, but the probability of that happening is very less compared to the probability of price, price making a break, making that slight pullback, right, making a break again, making that slight pullback, the break again, right? So in that case, it is what it is. I hope you have understood, and if you haven't, you'll understand it as we go further on, right? So with that being said, right, so we had this break of structure from this high to this low, and I was looking at the most potent demand zones. In this case, they're supply zones, right? So I had supply zone 1 here, right here, and I had supply zone 2 right here, right? But of course I did refine this and got I did refine this to the 2-hour or the 4-hour, if I'm not mistaken, and just ended up with this little zone in there, right? So the first one didn't work, so we just shaded it out and waited for the second one. That doesn't mean that we took losses here. No. Why? Because we wait for confirmations, right? If price, so let me take this a little bit. If price does this, right, and then you have an S&D zone here, and then you have an S&D zone here, right? So in this move actually caused the white to break of structure, right? And you have an S&D zone there. If price comes all the way up here, right, and then breaks this zone, lo and behold, in this area here, you'll never get a selling confirmation. Why? Because price will never break structure lower and then continue bullish, right? Price will just literally continue bullish, and continue bullish, right? Thus, no no bearish entries will be presented unless you're misanalyzing things and forcing entries. So let's return to our area. Oh, right there, right? And so the next area that we were gonna look for sells was here, right? Lo and behold, price comes up and taps our zone. Now, with price tapping our zone, so let's go back to our chart right there. Come on. Okay, boom. So there it is, right? This last up move before the now move, which is, you know, the supply zone, right? So with now price tapping our zone, what do we do, right? So this is the point of impact, right? With price tapping our zone, the pullback tapping the zone, right? So this is our point of impact, aka our confirmation area. Lo and behold, what do? We now look to confirm this. So I'm gonna head to the 15-minute chart and see how we could have traded this, right? Of course, I myself, I don't trade off the 15-minute chart. No, I reconfirm that and go lower even to the second chart or the 1 minute, or, you know, whatever, right? I like to keep my risks very, very, very minimal. So so this is the area, right? So this is now our point of impact right there. Okay, so now let's look at this area and see how could have we traded it. All right, so now let's follow structure. So price makes a high, a low, a high, a low, right? A high, a low. Okay, shit, that went unpredicted. So let me just mark this: a high, a low, yet again a high, a low. Right here again, a high, a low, right? This low right here. And then from this area, price comes up and makes what? And makes this high. All right, so what we have now is a high and a low. Look at what price does from here. Price comes a little bit down, fails to break, comes even more down, right? Okay, so with price coming down, what does it do? It breaks a low. Okay, so lo and behold, price now taps our zone, comes back down and breaks a low instead of breaking a high. What does this mean? This means that the bullish momentum in the market is now over, and this price is now ready to go bearish. Lo and behold, the next thing that we're going to seek for is that S&D zone that also requires what? Mitigation. Lo and behold, you have your S&D zone picture perfect there, right? Price comes up into the zone, right? The last up move before the down move started, aka the supply zone. So price retraces back to your zone, and what do you have? Lo and behold, you have a bearish entry, right? A bearish entry. The stop loss can be at the high or at the zone, whatever. That's your choice, right? Because I don't take the risk management part is all yours to handle, right? And we're, of course, we're looking to target what? The overall low. So this is our next liquidity run area. Boom. So lo and behold, so there you have your trade, right? And this shows you now the beauty of the MMC footprint strategy. Why? Because this trade now, in its overall sense, is a what? Is a 1 to 26 RR trade, right? So this is a 1 to 26, right? This is a 1. What's that ratio thing? This is a 1 to 26 RR trade, right? And let's make that 24. Okay, so we now have a 1 to 26 RR trade right there. Let's look at the probability of this trade, how many RRs it would contain if it was another person, right? A non-MMC footprint trader taking this trade, right? And as you can see, this trade has ran up to almost the TP area, but you know, it would still be running. And this is the beauty of risk management, as I have taught it. Why? Because if you just took your trade here and you're waiting for price to reach here to close your trade, that means until this point you'd still be stressing out with this trade. And you know, like it's now come back to a halfway through, meaning that price once upon a time reached this area here, right? And this was like how many pips is this? This was like 27 pips away from your TP area when you had how many pips is this? 1,000 pips. Yeah, you had 1,000 pips in your bag and you left them. You had 1,000 pips in your bag and you left them, right? And now price is almost but 27 pips away from your TP area, then comes back up to 600 pips up. So this means that if this trade was taken from here, right, and up to this area here where price is right now, it's 400 pips. So you lost 600 pips hanging between here, just because you don't want to take partials. You were trying to get those 27 pips to complete your trade, right? That's pretty much stupid, because if someone was using a 0.1 lot, this means that from the trade area to the TP area is 1,092, 1,090, almost $1,090, right? And you didn't close this trade. You didn't take any partials on this trade until it reached $1,600, right? $1,600, right? Using a 0.1 lot. You held this trade, refused to close anything off of that trade until now it came back to $450, meaning that you lost $600 just by looking at them. And this is what we call greed, right? You had something, right? So someone gives you $1,000 and then takes back 600, and you're left with 400, and you're completely okay with it. That's a level of insanity that is beyond the charts, right? So a proper risk management approach, right, would see you holding this trade without any stress. Just assuming you took partials here, like 50, let's just say 40%. You took 40% here, right? Okay, so 40% of 600, so that's almost like $300. So okay, so you closed $300 here, and then you closed another 40% here, which could have been like almost $200, right? If not, yeah, almost 200 or 300 or another 300, right? No, it's actually, yeah, it's another 300. And you came back up to, and so let's just say you took 40 and 40, right? So you have 80% of $800, right? So 80% of $800 is almost $600. So you have $600 in your bag, meaning that you can now hold this trade stress free. Why? Because it has already paid you. Anyways, lo and behold, that was just a simple insight on risk management. But let's now return to the idea of a non-MMC footprint trader trying to take this trade. So a non-MMC footprint trader would actually go, okay, so we have a break of structure if they would have been trading like this. So we have a break of structure, an S&D zone, right? And then a pullback to the S&D zone. So lo and behold, okay, so let's make this a little bit bigger. All right, so yet again, what do we have? They would have taken the trade here, right? The stop loss would have been at the high, right? So this is like a complete non-MMC footprint trader, and they would have been targeting the low. Oh, perhaps this zone, right? No, the low. Okay, so this now is a 1 to 6 RR trade. So we have moved from a 1 to 26 risk reward ratio to a 1 to 6 risk reward ratio. This, guys, shows you and proves to you the beauty of the MMC footprint strategy, right? With that being said, guys, I hope you enjoyed the video, and if you did, then don't forget to leave a like. As usual, subscribe if you haven't. Of course, you can turn that bell button on for notifications. And if you do want to get that premium level of knowledge, get that way more intense knowledge on the MMC footprint strategy, then feel free to DM us on Instagram at official green pips at X, as the poster shows, and we'll be more than happy to receive you guys. But until the next time, guys, stay safe, have a nice trading week, and peace out.